traders. This is Blake Morrow. You are listening to the Morning Edge webinar. I want to welcome you all back. Oh, okay, so let's see here. It is that time. Let's make sure my screen's showing here. It's that time just to get you guys up and running and get you guys ready for today. All right, so let's talk about let's start off with the euro dollar, and I know I've already briefly discussed this, but all right, so here's the euro. I know everybody's enamored right now with the inverted head and shoulder pattern, but like I said, before you get all super excited about that, I drew out what could be also an ascending wedge. So again, I'm telling you, I don't care what happens here. I don't care on so many levels. It's whether or not it's you know, I don't care because I'm not trading anything at the moment. I don't care because I'm probably not going to trade anything, and I don't care because either one would yield me a good opportunity to be in a trade. So I very much don't mind. I would say, and let me just delete all this stuff now that, oh crap, I didn't want to do that. Okay. I'm getting a little trigger happy here on my deleting stuff, so let me be careful what I'm doing here. Okay. So we got our inverted head and shoulder pattern. I guess what we can notice is we broke, false breakout, bounce back. Obviously, this all happened in Europe. Now you can see how we're just kind of holding the breakout point. That's important, okay? It's important from a bullish standpoint. You want to be, maintaining above that trend line. So that also means to me, if we take out new highs in the euro today, that suggests that we are moving back towards 110.50, which is going to be huge. Now, you guys know, and I don't have to illustrate how big this level is. Okay. Now I know it. Here, let me actually do it a different way. I know you go, oh yeah, look, it's previous support. It's a big deal. It is a big deal. It's a real big deal. Oops. I didn't mean to get two lines there. So it's a huge deal. Okay, because if you go, well, that's previous support. Of course, Blake, it's a big deal. What is previous support? But it's also that spike high breakout point from, I don't know where I just got lost there where I'll just take it from the 4-hour chart. Okay, so there's a 110.50, previous support, but also spike high breakout points. After we forged that bottom in the euro. So you can see how pivotal 110.50 is. Oops, grab the wrong thing, stand by. You can see how pivotal is 110.50 in the euro dollar. Like I said, we get up there, Monday, Tuesday, I'm shorting the euro up there. It's not, I don't question it. It's not like well, let me think about it. Unless, obviously, okay, let me take a step back. When I look at technicals, I have certain areas that I'm looking to buy or sell. And in this case, 110.50 is that level that I'm looking to sell, almost no matter what. Obviously, when we're there, you always have to take into consideration why we're there. If we spike to 110.50 and it's because Greece just put together a formal, compromise with the IMF and its creditors, well, I'm probably not going to short the euro dollar because it's probably going to scream past 110.50 and off to 112. So, obviously I have to think about what I'm doing when it gets there. Nothing is, I'm going to do it as soon as it gets there no matter what. I will tell you this much. If we get to 110.50, I will strongly consider shorting the euro. Okay, I will look at it and make sure that that's the right decision to do at that point in time. But that is my level of interest right now. There's reasons why. There are reasons why I'm also not convinced about the downside either, and I think there's more upside, is because we completed our flag pattern. That was a perfect flag pattern completion coming out of an ascending wedge. The euro couldn't have been more technically perfect over the course of the last 2 weeks, and we've traded it. I know I have, and hopefully you guys have too. I've traded it quite efficiently over the course of the last couple of weeks. Actually, I've been doing really well. It's been one of my better. It's been one of my better months this year. Okay, coming out of the ascending wedge, setting up the bear flag, playing the bear flag perfectly, being long the dollar until the bear flag completed, maybe not against the euro completely, but against everything else. So knowing that the euro is going to be the, the the key component in the whole recipe, you know, so it's worked out really nice, and it's been a great month because of these developments, and the euro has acted accordingly. Textbook. It doesn't always happen like that. Okay, it's nice to see textbook moves. So therefore, being textbook, we've got to also respect the fact that we're got an inverted head and shoulder pattern. We're at a neckline right now that textbook, would actually take us up back up towards 111. So we have to be aware of what's happening here. Okay. Flip side is this, and again, I want you to look at it in both views, that the euro dollar also could be an ascending wedge. And if you don't recall, the ascending wedge works perfect in the euro. So does a flag pattern, which these ascending wedges or flag patterns in this type of formation is just a continuation pattern. Okay. So we could very easily see another one of these. Do you get my drift? So I don't want to get married to the fact that we have an inverted head and shoulder pattern. Hold on really quick. Sorry, Kip is texting me. Yes. Same. Yeah, if you guys are if you guys are Wise Trade customers, I have not been able to send out alerts this morning. We think it's a server issue due to the rain. Kip's not able to send out alerts. So if you guys are stock market traders and you get Kip's poppers and droppers via the alerts, he's not able to send them out. And I really do agree with Paul and everybody else that I think it's a rain issue. But I've sent emails and whatnot to our administrators in Dallas. So as soon as they get in the office, they'll get it fixed. It'll probably just be another hour or two. So just want to let you know, if you guys get alerts from us in the mornings, I wasn't able to send out my research in the morning and that type of thing, which is rare. It's I'd venture to guess that it probably happens once a year, if that. So over the last 13 years I've been doing this with this company, so it doesn't happen that often. All right, anyway, so again, there's the euro. I think I've beat it up enough. So what do we do? What do we do with here? So what I think we should do is this will clue me in that we're ready to continue to rally. I think is we have to break above this high, whatever the spike high is overnight. 109.90. Yeah, 109.90. So if we take out 109.90, then the next stop will be 110.50. Okay. Bias. I'm going to put us back in a neutral bias, and support. Okay. Now here's where Here's where support is. Let me get rid of that. this support's going to be really critical, because if we pop through those lows, then that's going to tell you that that little ascending wedge that we were dealing with is, you know, we're about ready to roll over here. Okay, so that comes in at 109 and a quarter. Okay. Let's go look at the cable. So the pound was under pressure, and maybe it was because of the uh, um, hold on really quick. Um, okay, so the cable came under pressure. We drew out this channel yesterday, and I guess that channel is pretty good. It's worked out really well. Okay, see it just like this, right? Channel, good. Drew this out yesterday. Oh, probably be a good long down here. We're getting close, right? That is a 50% retracement. 50% retracement, and also let's go back to the 4-hour chart so you can see it. 50% retracement, previous resistance, you know, big pivotal level for the cable. So if we get a move down to 152, probably be a good buying opportunity. It's going to be really good support. 1.5200 asterisk. Yeah, that's going to be really key support. You know, the flip side is if we break through this channel resistance here, shoot. We break through this channel resistance, or actually let's just take those highs right there. Okay. That would turn the cable around. And by the way, I'm actually considering selling my pound New Zealand. Just letting you guys know. I'm thinking about pulling the pound New Zealand uh, profits off the table. The reason why is because we're challenging some near-term resistance, and if the cable can't get a lift after today, I'll probably do so. So the 153.50 level is going to be really key resistance. Okay, that'll be key resistance for the cable. I still think we're range bound. Let's go over the Swissy. The Swissy, really critical support here at 94 cents. Okay, that's been holding. Now, again, the risk with the Kiwi is that what happens here is if anything goes awry in Greece, we're going to see some really strong upside pressure in the Swiss franc. That I'm not, you know, I'm very much keeps me sidelined on the dollar Swiss, is why I haven't been trading the Swiss franc as much as I actually really want to buy this currency. You know, once we get past, you know, the storm, whatever that storm is, I'm at that point in time, I'm going to be happy about trading the Swiss franc back to the upside, or trading the Swiss short, but the dollar Swiss back to the upside. Um, just right now, I'm like a tip said all week, I'm really disenchanted with this currency pair. I don't think there's any reason to be trading it. 94 cents has been support. We wrote that down yesterday. It obviously is holding pretty well. And 95 30 is going to continue to be resistance. So support is 94 and resistance is 0.9540. Okay. Let's go over to the yen. So the dollar yen, we have to watch the dollar yen carefully, and I think we have to watch it in terms of risk appetite and risk aversion. The reason why I say that is that what's happening with the dollar yen is we're stalling on moves above 124, which if you don't understand why it's such a big level, you have to go all the way back to 2007. Okay, and the spike high over here was 124.20 or 124 like 15 or 13 or whatever, the 124.14. Okay, we've been as high this week as 124.45. Yesterday's failure above those highs is very concerning. Now, it hasn't backed off much. All it's doing at this point is really solidifying how important this 124 level is. But there hasn't been any indication that I see here to be on the short side of the dollar yen. Now, that doesn't mean that there won't be. I'm just, you look at the daily candle yesterday, that wasn't a reversal candle. So, if we had like a shooting star or, gravestone doji, I would have probably just turned around and started shorting every yen pair out there, short the pound yen, New Zealand yen, Aussie yen, Euro yen maybe. But what we're doing is we're just consolidating against 124, because what's happening is you get people that are like, it's not going to break, can't break, so they keep shorting, whether it's current levels above 124, 123.60, whatever, and everybody's putting their stops above 124.50. So you're nudged up against resistance, and you got everybody looking to fade this move. The stops are building now above 124.50, which means if we do break out, it's probably going to, be a accelerated move, because now you got all these stops building above those highs. Like I said, I'm really not too sure what to do with the yen at this point. I don't want to short it yet. I haven't seen anything that really suggests that I need to be on the short side, but I don't want to buy it either. Frankly, I'd rather see a spike up to 130 and fade the hell out of it. But that's just me. I mean, that's just me talking on something I'd like to see, not something I'm really confident that's going to happen. So I guess what we'll have to do is we'll just have to monitor the 124.50, which 24.45 was the highs, but we'll just write down, for argument's sake, 124.50, and it's going to be pretty key resistance now. We are in a bullish, obviously in a bullish trend. We're just nudged up against resistance. So what would signal to me that this market's ready to, to start moving lower, I think would be below these lows, because it would then signal that we are making a series of lower highs, or excuse me, lower lows. Okay. So this breakout point comes in at 123.32. The low right here is 123.48. And the overnight lows was what? 124.60. Or I'm sorry, 123.60, 123.59. What is that high? 32. So really, we would need to move below 123.30, and then I'd feel more comfortable about being on the short side of the yen. Oops, 23.30. Sorry. Okay. Then it would, then I would start thinking, all right, I'm going to start shorting the yen. I'll put my stops 100 pips higher, above 124.50 or whatever, and really start targeting back down towards the low 120s. And that may not be something that develops today. I mean, we could have a weak number, weak GDP number, and that could send the dollar yen reeling, and then maybe that'll be the clue to really start getting on the short side of this thing. Flip side is we're not too far from the highs. We have anything that comes in under 0.8%, you know, zero point 0.6, zero point 0.5, zero point 0.3. This dollar yen's going to scream right up to new highs. Okay. So I think it's very capable of going either direction, as is a lot of the market at this point. All right, let's take a real quick look at the Canadian. So the Canadian, we couldn't hold above 125 yesterday, which was, and it actually set up pretty good. You see the 4-hour chart, it set up a nice reversal candle. We rallied all the way to 125.40. I'm starting to look at it a little bit differently at this point. I'm starting to look at it more as a weekly possible flag pattern, which means that we're still developing the flag, or the mast. Okay, if it is the case, but the 618, we closed below the 124.80, and you have to imagine we were at one point we were at 125.50 basically, 125.40. So we were making a nice move above 125. Dollar weakness seeped in after Aso's comments yesterday about the Bank of Japan is closely watching yen developments right now, yen weakness, and the yen reversed, and that pulled down a lot of dollar pairs at that moment in time. But I still look at the dollar Canadian as, it backed off a little bit. I'd be a buyer if we came back down to this red line. This is what we were talking about at lunch money yesterday. If we can see a move back down here to 123, I'd be a buyer. And I'm telling you right now, if we can get to 123, I'm going to be a buyer. It's just we're pretty far away from there. Dips have been very manageable. After this rise, you just have to be very aware of, this downtrend line that comes into play. Also the 618. U.S. Treasury Secretary Liu says possible that June 5th is not the real deadline for Greece. That comes from Polly. Very nice. So now the euro's spiking back up. Great. Okay, anyway, thanks, Paul. So let's figure. I don't think 123 is a possibility for today, by the way, for the dollar Canadian. But let's see what is. Looks like these lows here are probably going to be pretty important. That's 123.95, maybe 124, and that's probably going to be some pretty key support, because in all actuality, if we breach 124 to the downside, might probe a little bit of stop. So I'm going to put in 123.95 as support for today. And then 123 below that. So 123.95. Okay. Do we have Canadian data today? We do. We have Canadian GDP as well. Shoot. That 123 could be in play. Flip side is Canadian economy is starting to show some real signs of wear and tear. If we have a strong US GDP and a weak Canadian GDP, because Canada's GDP is expected, ironically, up at 0.2%, but I would think it's going to be a tough nut to crack. If Canada's GDP comes in at zero, flat, 0.1%, you're going to see this thing scream right back up. So 125.40 is going to be good resistance. Obviously, it's going to be key. Forgot we got Canadian data. Okay, so when we come back, I'm just going to put it in a range right now. So when we come back, we've got the Kiwi, the Aussie, and the dollar index, and we'll take a look at see what the Nordic currencies are mixed, and U.S. dollar and Mexican peso is holding up pretty well. All right, I'll be back in a few moments. When I come back, we will continue on. Thanks. Hey guys and gals, this is Blake Morrow. You were listening to the Morning Edge webinar. Hope everybody's having a great trading session. Welcome back. Let me go to, hold on real quick. Okay, sorry, I was just in the middle of doing something. Let's go take a look at the Kiwi. And so the Kiwi, I mean, it's very weak, and we are quickly approaching the 120 or 120, 70, 25, 127% extension. Getting a little oversold, and just so everybody knows, I'm selling any bounce in the Kiwi, any significant bounce. I was hoping we'd see a bounce back to 72 cents overnight, 72.15. I was actually hoping we might make it back up here to get on the short side. Nothing doing. And right now we'd have to scale back over 72 cents really to even take the downside pressure off. And so I'm going to write that down. 72.20 actually. So whatever this support is, 72.10. So unless we get above 72.10, this downside pressure is on, and it's bearish. I spent, if you missed it yesterday, I spent 45 minutes talking about every pound, every New Zealand pair, okay? And, and basically told everybody how bearish I am, these Kiwi pairs. I may not, matter of fact, I'm actually strongly considering getting out of the pound New Zealand today, but reestablishing my position, at 210.50, okay, and 210.50, 211. I'm strongly considering it. I haven't done so yet, but I might do it this morning. Actually, maybe even before we get them off air. Depends on how it reacts after the after it reacts from the GDP numbers. But I'm more concerned that the pound New Zealand just stalled again near the 215 level. And so with that being said, I might pull the trade off and just try to pick it up at a little bit cheaper price. But overall, I'm extremely bearish the Kiwi. I think the Kiwi's got a lot lower levels to go. If you look on like a monthly basis, okay, and let me get rid of these. Let me get rid of these moving averages. Okay. We were really stalling at a 38% retracement on the monthly chart, and we really just started breaking down again. So, the next stop is going to be 68 cents or so. And I feel very strongly about that. I feel very strongly that we're going to see the mid 60s, 63, 63, 64, 65 cents. Okay, eventually. Not obviously in one big fail swoop. But I also think the dollar is going to gain strength across the board. So it's, that has me a little skeptical about the pound New Zealand at the moment. But anyway, now that we're reigniting this downside here, surging past that 38% retracement on a monthly basis, we'll close below it today more than likely. And we'll probably close below this 71.70 today, more than likely. Well, not more than likely. We'll see about that. But I think it puts the downside pressure still on a month-by-month basis. So anyway, the Kiwi looks bearish. The support for today will have to be the, well, we'll go with the round 71 cent level. After that, it'll be 70.25. So, and 70.25 is the 127% extension. So 70. 25 and 0.71. Whoops, 0.71. Okay, let's take a look at the Aussie. All right, so here's the Aussie. So yesterday when we were here and we had completed our, flag pattern, like, okay, if we can get a bounce back to trend line resistance, remember this blue trend line, if we can get a bounce back to trend line resistance, it'd be a nice short there. Well, we got a bounce. We didn't get much of a bounce, though. That's the problem. And now what you'll notice, let me get rid of this. Well, you can see it. See that way over here? I'm going to delete it, though. Now, actually, let's do this. So even if we break the highs from overnight, trendline resistance, this is not the flag. The flag already completed, right? That's done, completed. Okay. I can actually, oh shoot, I didn't want to do that. Damn it. Damn it, damn it, damn it. Okay, I don't need it for now. While we're below 76.90, it is bearish. We'd have to get above 76.90 to take the downside pressure off. And obviously the 76.15 is really key support. Because that was the flag pattern completion level. Okay? Okay. Let's go over to the dollar index. So the pound New Zealand, just so you guys can see it, big concern over here. Let me delete all that. We can always redraw everything. Do you see this? Concerning to me. Oops. So if we don't push into new highs today, if we don't close near our highs today in the pound New Zealand, I'm probably going to close out my pound New Zealand. And like I said, I'm going to reload it on a move back down to 210.50, 211. Okay, just letting you all know. Anyway, let's go back to the dollar index, or let's go to the dollar index. That's what I really wanted to take a look at. So here's the Dixie. Still struggling once again with the, what is that? Oh, that was the inverted head and shoulder pattern. There's the inverted head and shoulder pattern. Shoulder, shoulder, head. We haven't quite completed 618 retracement, struggling there, but and actually, no. From the absolute high to the low, 618, key resistance here. $97.65, and if you it's obviously really key support, and so we're going to note it as such. No, not that. I didn't want to move that. 96.75, 97.65. 96.75, 96.75, 97.65. And that, by the way, is a pretty key resistance. And I'm going to put us in a range until we break out of this little range here. Okay. All right. There's your bias chart. Let me see if I can take some questions.